American Retirement Advisors with the Great Investments weekly talking points for the week ending March 17th, 2023. Let's get into stocks. The equities were mixed as markets digested the news of the Silicon Valley Bank failure, with the S&P 500 gaining 1.47%. The Russell 2000 lost 2.57%. The NASDAQ was up 4.44%. Now, the financial sector has a much larger weight in the Russell 2000 than any other of the major indices. So the overseas, the developed markets, was down 3.11%, while the emerging markets was down 0.26%. In the U.S., the best performing sectors were communication services and technologies, while energy and financials were the poorest performers. By size and style, large caps outperformed small caps and growth outperformed value. Let's talk about that real quick. When we talk about the bank failure, everybody's wondering, are we in there? No, we are not invested in that. So it did not affect us, but of course the ripple effects in the economy, we're going to feel that a little bit. Fixed income interest rates fell and bond price values rose as expectations for continued rate increases by the Federal Reserve has softened. The benchmark 10-year Treasury yield dropped 31 basis points to 3.39, while yields on shorter maturities fell more sharply by 79 basis points on a 2-year Treasury. The spread between the 2-year and the 10-year narrowed to 42 basis points from 90 basis points in the previous week. Now, the Federal Reserve will announce this Thursday its decision to raise rates. We're expecting 25 basis points as the current expectations, or leave unchanged, which they're calling a pause. Don't know about that. I mean, they're seeing how everything is, so I wouldn't be surprised if we see another quarter-point rate increase. Let's get into commodities. Gold, which is a holding in the endowment series and the precious metal strategy, was up 5.68% last week as investors sought a safe haven due to the banking concerns and tensions in the market. Also, the increased expectation to the Fed for be less aggressive with rate hikes is helping the price of gold, and it closed at about $19.79 per ounce on Friday. It was up over $2,000 this week. It's back down to a little bit under $2,000 today. Bitcoin is also up to 28,000 per ounce or per Bitcoin. So what does that mean? So anyways, the economic news: inflation as measured by the Consumer Price Index was 6% in February from a year earlier, down from 6.4% the month. The Labor Department said it was the smallest increase since September of 2021. And when excluding the volatile food and energy costs, prices advanced at a slightly slower 5.5%. Now, the shelter index was a dominant factor in the monthly increase in the index for all items less food and energy, driven by the lodging away from home category. Going to hotels, which was up 2.3% last month. So yeah, try to travel today. You're still finding some deals, but airlines are pretty expensive and hotels are up there considerably too. Now, inflation as measured by wholesale prices in February decreased 0.1% in January, below consensus expectations of a 0.2% increase. So for January, producer prices were also revised down to show a much smaller increase than originally reported. 80% of the decline in February's wholesale prices was attributed to the drop in chicken egg prices, and fuel prices also fell. And wholesale price changes normally indicate future consumer price changes. We'll keep posted on that. This inflation is a little stickier than they thought, isn't it? Let's talk about companies. Large cap tech holdings in contrarian choice, Core Select, G33 strategies, which include Amazon, Google, which is Alphabet, right? Meta Platforms, which is Facebook, Microsoft, and Nvidia. Nvidia is going crazy right now. It's up 70% this week. But last week they rose 9 to 13% as a whole. And they stand to benefit from a pause or ultimate decline in interest rates after a year of rising rates that have been a headwind for valuations. They also benefited from the flight away from the financial sectors, and in a slowing growth environment, we believe that growth stocks will become more scarce, making these all the more valuable. So that's it for this week. Thank you so much for being part of the ARA family. If you need to get a hold of us, call us at 855-756-5700. Visit us at aradvisorsinc.com. We are reaching out as well because we had that buffered index where, you also heard the Credit Suisse Bank, which was recently acquired by UBS, but they had a lot of problems and they underwrote one of our offerings. So we actually shorted that offering and closed that out to mitigate loss. So we wanted to make sure that's where some of you were in, some of you were not. You would have gotten a call and an email if you were in there to give you different options. So we always want to make sure that we're keeping you updated, looking out for you, making sure that we're getting in and out as best we can. and we help to get you growth in a year that was horrible. Last year was not that great. We still did pretty good, all things being considered. Some of our accounts are lower than they should be, but we're seeing a lot of them come back. So very good, very positive. That's it for this week. God bless you. We'll see you again next week.